Now go to our Mauritius market update, and joining us is Sharona Rambakis, who is Chief Investment Officer at DMH Associates. Good morning to you, Sharona. It was interesting yesterday, we're talking to Mauritius 2 days in a row. We had a program yesterday where we discussed the diversity in the Mauritian economy, how much it has diversified. So it's great to be talking to you this morning with specific successes in the financial sector. And as a fund manager, you've had your eye on that. So perhaps give us some of the highlights there.
Okay, good morning, David. Thank you for covering the Mauritius market, which is in a positive and optimistic mood. The SEMDEX is up 12% year to date. And since the past few weeks, we have seen some stocks reach their all-time high. 2 weeks back, SBM reached 1.07. Last week, SIM reached 850. And we even saw policy reach 6.90, and so in general there's an optimistic and positive mood, which can be explained by the relatively good results released a few weeks back. If we look at SIM, for example, profit before exceptional items 4% for the 9-month period, and as per management, they could see the same trend for the full year. So, and right now, SIM is trading at a PE of 8.4 and has a dividend yield of. However, for SIM, we have to watch out for the impairments linked to the finance cluster in the hire purchase and card activities, and uncertainties regarding the DTA with India.
What about the State Bank of Mauritius, Sharona?
Yeah.
The State Bank of Mauritius?
Okay, State Bank of Mauritius. Mauritius results, the NII was up 23%, profit after tax up 21%. So what they have done really is they have swapped from low-cost asset and high-cost fixed deposits to high-yield local deposits. So essentially, the NII growth was driven by this swap. And going forward, I think SBM will post interesting results. And right now, it's trading at a PE of 10 with a dividend yield of 3.8%. Their plan is to expand into Africa and India. So we have to watch out for their cost-to-income ratio, which could go up also, which is right now at 32%, but which is likely to go up. Some of this growth this expansion can be financed by their capital adequacy ratio, which is right now at over 20%.
Okay, and then looking at the tourism industry, yesterday we were talking about, I had the impression that tourism was a major part of the Mauritian economy, and it isn't actually. It's reduced in importance, as has the sugar industry, which is another traditional area. The hotel stocks, bad results expected from the hotel stocks, and how does that link to the tourism industry?
Well, we have 4 big hotel stocks in Mauritius, namely NMH, Sun Resorts, Lux, and Constance. If we look at tourism data, tourist arrival is down 1% for the first semester, while receipts from these tourism arrivals is down 6%. For the full year, the government expects arrivals to go up by 1.5% and receipts to go up by 0.5%.